pushes these buttons. We are live. Okay.
We're on?
We are on.
I'm seeing on our end if I can see it. It'll pop up in a sec.
Anthony Molinaro, you're looking okay. Don't worry. You're good. You're good. Okay, so
yeah, see that camera. We'll fix yours. Look, when you speak, look at yours.
Test. Yeah, just push it back here a little bit.
Some last minute touch-ups here to the studio. No, I was just saying, yeah, that one's actually grainy. We'll get that fixed. We can get that fixed after. I've noticed that camera podcast shot on you. You're blurry. Yeah. Okay, now we're on. Looks like we're good to go.
Yeah, your one looks clear.
That looks a bit better, actually.
Yeah, now it looks a little bit better.
Centered. Okay.
Just out of focus.
Okay, well, another Leafs win last night. First time the Leafs have started a playoff series 2-0 since the year I was born, 2002.
No way.
Yeah, against the Islanders, 2002.
I think Belfour might have been at net then. Who was in net?
This is the year.
Yeah, who was the net? Yeah, I don't know who was in net in 2002.
It's Cujo.
Maybe.
My prediction is Leafs in 5. What do you think, Anthony?
I mean, I don't watch hockey these days, but I'll go with Leafs in 5. They look pretty good from the highlights I watched. So,
oh wow,
I think this is your guys' year, man.
I just assumed Leafs in 6.
The only thing is we got to play one of the Florida teams after. If we do end up beating Ottawa, we got to play either Tampa or Florida, and those teams are. And it looks like Florida's going to win.
Demolished Tampa. It was only game 1 though. 7 series, a long series.
Long one. Even for the Leafs, I could see the Leafs losing 2 in Ottawa.
Up 2-0. I feel like we're in good shape.
When I stopped watching hockey, like the Panthers absolutely sucked. So it's so weird to hear that they're good now. Tampa was actually good back in the day.
There's no state tax in Florida, man. They get, you can pay.
They just keep winning, eh?
Well, I think you just attract a lot of good players because you can pay a little bit less, get more good players under your cap when you're not paying a state tax. Canada has like a pretty high tax rate. We're probably like California.
I know.
So we have this tax burden. I think Tavares was taking the government to task on that a little bit. I know 2 American players did that. 2 American Blue Jays did that. A third baseman for the Blue Jays did that a little while ago. We were just talking about that.
What were they trying to do though? Like
I think they were just saying, listen, I'm American and I shouldn't be paying this tax rate. I don't know what the excessive tax rate was, and they won.
But Tavares is Canadian and lives here in Ontario. Like, how can he really fight?
I don't know the details.
Oh, okay.
I don't know the details of it, but yeah, I guess some excessive tax rate on some income level is happening. A signing bonus taxed at a different rate. Like
I don't know what it is either.
Yeah,
he wants like a superstar exemption from the tax code.
The point is that Florida has less tax.
Yeah,
so they can just sign more players for less money under the cap. So
better weather, less pressure.
Less pressure. Yeah, you got to be a special breed to be in a Toronto Maple Leaf.
Ryan O'Reilly couldn't handle it.
No, he clearly couldn't handle it. But Stolarz was walking down the street, down Bay Street.
Yeah, into Scotiabank.
Yeah. He's a big dude. That's our goalie, Anthony.
Holmberg does the same thing. He walks right in the front Scotiabank doors there every game.
Oh, does he?
Yeah.
Oh, wow.
Yeah.
This is the first pod, I guess, since the event. There hasn't been a new one in a while.
Yeah, so I don't know what points you guys wanted to talk about specifically on this thing. The biggest thing that I kind of wanted to mention is that people seem to be confused with what's going on in the economy right now with everything that the US is doing and how the rest of the world's responding to it. But it seems just very clear to me that like we're at the end of a debt-based money system that is going to just slowly unwind. It's going to slowly unwind, but that speed of the unwind, I guess, will accelerate. And I think today's news of 21 Capital, where Jack Mallers is going to be the CEO of what's launching as a pure Bitcoin Treasury type company to compete with Strategy or MSTR, to me, that just says everything. Like there's a new financial system being built. There's an old financial system that is hanging on for dear life. And all the Canadians out there who think that the Canadian banks are just going to be around forever because they always have, I think they're just in for a rude awakening. And when Nick and I had a podcast a little while ago, I think my hot take was people don't understand the Canadian banks are under threat. You have a regional banking system globally, and the regions being Canada, America, Europe, You had all these regional China, you had these regional Japan. Like, it wasn't easy for Anthony Molinaro or Aiden Karadza to open a bank account in Japan or in Europe or even get a US dollar bank account. Like, how easy is it for you to get a US dollar bank account today as a Canadian from TD Bank or RBC?
Mm-hmm.
It's not the easiest thing.
No.
Businesses can get it, but as an individual, you kind of have to look, can I get one? Can you get a US denominated credit card? So you have these, we had global trade and regional banking. And it seems to me now that we're going back to regional trade zones, but global banking.
Mm.
And when the future of the economy is going to be more and more digital with AI, and you're going to have global access to that artificial intelligence with companies like DeepSeek coming out of China and open sourcing their AI, and you layer on a global banking system, this is like unprecedented change that no one's ready for. And the average Canadian is still investing in like Canadian dividend paying bank stocks, thinking this is going to be a good investment for the next 20 years. I just don't think it is. I think it's going to be the worst investment over the next 20 years relative to things like Bitcoin, because you have a network that is growing, that is side by side the old system, that's purely global. Because I was speaking on a podcast yesterday with a guy from Vienna, Robin Sayre, and we were just chatting about, if we meet in Vegas at a conference and Leon Vankoum from Germany shows up and Bram shows up from, the Netherlands, and Robin's there from Austria, and Anthony's there from Canada, and Aiden's there from Canada, I'm there from Canada. And let's say over the next, the few days in Vegas, we all pay for each other's meals. And at the end, we want to kind of settle up like, oh, you paid quite a lot more for that meal. Let me just get you back, $100 equivalent. Well, are you going to pay him in euro? Because they're from the Eurozone.
Mm.
If there's an American there, you're going to pay US dollars? Like, it's just a massive pain in the ass. Or because it's all these Bitcoiners working on new system, or you're just going to fire over some Bitcoin to him and settle up that way. And then if that's the case, more and more capital goes into the new system, less and less capital goes back into the old system. The old system just gets drained of value. How are these banks going to survive?
Yeah.
I just don't see it.
Well, I think a chart that you shared too at the economic update was the amount of US treasuries held by China, and that's coming down now. And then the amount of US debt held by stable coins like Tether. So like USDT, it's a stable coin pegged 1-to-1 to the US dollar. And now they're starting to hold more and more US debt, while China's holding less and less US debt. And I think that's just a crazy chart. You were just showing like how it's the old system is kind of.
Yeah. So I'm just trying to put it on the screen.
I grabbed it from your economic update there. But yeah, I think that's just showing like what's happening in these stable coins and technology companies that are global are just increasing at an exponential rate. I think Tether made $13 billion in profit last year with 100 or 150 employees.
Profit per employee was like 185 million.
Yeah, that's nuts.
I put it up on the screen here. So the top there, this is a tweet by Nick Carter. So the top line are treasuries held by China, Nick, Aiden, as you're describing. And you can see the line is decreasing. It's decreasing since about 2010. And then this bottom little line is Tether and how many US treasuries they're holding. Like, you can see it in this chart. Like, the old system was like, these nation states holding US treasuries, and they're just going away. And these kind of new things that didn't exist, like Tether, is becoming like the 7th biggest buyer of US treasuries already.
Yeah, globally, which is insane.
It's completely insane. And what, to me, that is kind of representing. So let me go back to that. I guess that what that's representing is just that as more money enters that new system, the old system just has less value to play with. I guess the reason I keep repeating it is I don't think Canadians are ready. Like, all Canadians that I speak to miss the destruction of the middle class. We were talking about real estate in 2008, and everyone misses it. They're like, oh, I don't know about Hamilton, Ontario. I'm from Toronto. I don't think I should get a property out there. And you're like, well, no, you need hard assets. So like, if this is a hard asset you should buy, then like seriously consider it. And then those properties in 2008 go from like 200,000 to today, they're worth like between 750 and $1 million. And people just kind of miss it. They just don't see it at all.
Yeah.
They don't
till it's obvious.
It's just too, then it's too obvious. I was like, oh, I missed it. But you know what? People told us in Hamilton they missed it in 2012. When properties in Hamilton went from 200,000 to like 234,000 in about 2011 or so, people told us they missed it. They missed the opportunity.
Yeah.
And then they went to like 450 and they're like, oh, we missed it. Then they went to 550 and they're like, we missed it. And now like they've corrected down to like 750 from like 950. And they're like, oh, you know what?
Real estate crashed.
Yeah, like real estate crashed. And people tell you real estate crashed. You're like, I don't even know what you're talking about. Like, we're not even speaking the same language.
Yeah.
And I think the same thing is happening now. It's like there's an old money system. Like this news today of 21 Capital. Is that the name of
I'll read out the headline here. I have it somewhere. This is what it says. Tether, SoftBank Group, and Jack Mallers launched 21, a Bitcoin native company, through a business combination with Cantor Equity Partners. And I believe, so I guess that's Cantor Fitzgerald, their dad. And then he's now the Commerce Secretary in the United States. Yeah. And I think it's his son that's running this bank. And now that's putting this together with Tether and SoftBank. So you have
with Jack Mallers, a 30-year-old, as the CEO of this thing.
Yep. And now I think they're launching as the third biggest treasury company in the world.
Bitcoin treasury
company, sorry, with $42,000 Bitcoin, 42,000 Bitcoin in the treasury, trying to replicate something like MicroStrategy's been doing for the past 5 years now, I guess.
That's nuts.
And it's just another signpost that like if you walk downtown Toronto with everybody working in the financial district right now, and you say, hey, did you hear about 21 Capital today? I don't know, like 85%, 95%, 97% of people are just gonna say, no, I didn't hear. I don't know what's going on. And I'm just kind of looking at them like, you're missing another phase shift, another huge trend that you could be profiting from. I just don't get it. I don't understand how people miss these.
There's a lot going on.
Not everyone's like you though, I guess. Like,
but I know I'm slightly insane when I kind of look at this kind of stuff, but it seems,
I think you're looking to get ahead. I don't know if other people are, because if they were, their eyes would be a bit more open and they might catch some more trends, I think.
I think it's less getting ahead and more just like, I want to be left alone and I want to live life on my own terms.
Yeah, you want freedom.
I just want freedom.
Yeah.
So in order to achieve that freedom, I have to keep abreast of these trends, I guess. That's the way to say
it. You recognize finances as a tool of achieving some of that freedom. Right. So you place some emphasis on getting your finances in order.
You're hitting on a good point, because if you don't want freedom, then I just look at you like, what's wrong with you? And you're right. Some people clearly don't. You're right.
Yeah.
So I'm the problem. I'm different.
I'm wired the same way. That's all I want is freedom. It's like my North Star. Yes. Like everything I do is to get more freedom in my life.
Yeah. And you see a vehicle to get freedom and you don't understand why people aren't jumping on it.
Yeah. Bitcoin is freedom technology. You have this beautiful technology to create more freedom and abundance in your life. But if you're not looking for the freedom, I guess you just don't care.
And I think it's difficult. Like JP was asking this question on Monday, where he was talking to a friend about Bitcoin, and he was struggling trying to explain it. And I think it is difficult because all the critics of Bitcoin, our friend in Toronto has the Bitcoin podcast, Rajat. He was getting, I think, attacked a little bit online because somebody was saying he doesn't know what he's talking about and Bitcoin's a Ponzi, and Michael Saylor is propping up the price because, he's buying it himself. And when you see that person, because there's many people that speak like that, they don't have a definition for what money is. So you can't even debate them, because if you ask them about, well, tell me about money, like what is your definition about money? They have no definition. Like they can't tell you what money is.
And not even that, a lot probably don't see the problem with the current monetary system. So yeah, they have no incentive to want to look at what money really is,
because they've done pretty well in the current money system. So it's like, why attack it?
And if you're not into any of this stuff and someone tells you that, like, yeah, this monetary system is just, it's failing. Some people are just going to look at you like you're crazy. Ivan's in here. What's up, Ivan? He's saying it's looking kind of dark in the studio.
Yeah. We're playing around with new lighting solutions here, Ivan.
And then, so what you guys, I wanted to ask both of you guys about this, because what you guys were talking about with everything happening and technology and AI and automation now just exponentially increasing productivity. How does this affect GDP? Because you were mentioning this in the economic update, and I feel like it's kind of hard to grasp to realize that these productivity gains from technology might actually pull down GDP and not increase it like a lot of economists are saying in the mainstream media.
I can't even share my screen because look, it goes reverse. Check this out.
Yeah, it's inverted for some reason.
That's okay.
I gotta fix it for next time. So yeah, I think that's an important question. What makes it also obvious to me? Can you push that light back a little bit? I just want to see. Yeah, there we go. There we go. Center it up there. Oh, there we go. There we go. Thank you, Anthony. What's happening, I think, right now is just pretty obvious. But it's like GDP is a measurement of spending. It measures consumer spending, government investments, more spending, and net exports. But the things that influence it.
And why does GDP have to go up? Like, how's it tied to national debt?
Okay, so GDP has to go up. So it's just a measurement of all the spending. It's like a crude way that was developed in the 1930s of trying to give the government some data around what's going on with the economy to hopefully prevent another depression and get them out of that depression. It was like, we need some metric, some data to tell us what the heck is going on. And this economist, I forget his name, comes up with this thing, and it's called gross domestic product. And this is how you measure it. And this was given to the government, and governments in the West adopted this as like, okay, we now have some measurement of what's going on in the economy. And it was a weird measurement because it was measuring spending. It didn't measure like Anthony Molinaro's like savings. It didn't measure Aiden Karadza's purchasing power ability. It didn't measure the health of a family in their financial situation. It didn't measure the health of businesses. It literally just measured spending. And back then, when the economy was a goods-based economy, it kind of like caught a lot of stuff because people spent a lot of stuff on goods. Today, if you fast forward like almost 100 years, and we're a heavy service-based economy, and now we've realized that the money itself is broken, the metric is kind of useless. But the reason the metric has to keep going up, GDP has to keep going up, is because if there are less dollars circulated in the economy through spending, so if that GDP number goes down, you have less dollars to pay for the debt. But the debt always goes higher in a debt-based economy because it's a Ponzi. So the debt always goes higher. So GDP cannot ever be allowed to go down for any length of time because you literally have less dollars floating through the economy to pay for the debt, which is always higher. So if the GDP goes down year over year long enough, you literally run out of dollars
to pay for
the debt. And then the whole system collapses. So GDP is this like almost artificial measurement to increase that must be increased and inflated at all costs, or there are not enough free floating dollars to pay for the debt. And when you raise interest rates in an economy, more of those dollars are required to go pay for debt. So it makes the problem even more aggressive.
Because there's more interest to pay.
There's more interest to pay.
GDP is measured in dollars, right?
Yeah. It's a measurement of consumer
So if
spending.
you just print more dollars, GDP go up.
Yeah. Yes.
So it's such a ridiculous conversation.
Full economist right there. Full economist. And no economist will talk about that. Print more dollars, stuff them into people's bank accounts or into, the economy, count the people spending those dollars. We're in business. Even though there's more debt, there's more dollars being floated around. So we're good to go.
Yeah. I think that's the big disconnect is everyone is programmed to measure the world in dollars. So if you're measuring your investments in dollars, then, your investments are always going to go up in dollars, but you never question the thing you're measuring with, the unit you're actually measuring with. And that is the big unlock. It's like once you realize you are measuring your investments in dollars, but what are dollars? And do the value of those dollars or measurement units change? Because if so, you're getting improper or inaccurate information.
Yeah.
You have to question that very measurement unit itself. And once you do that, then you realize, holy shit, it's just printed out of thin air. They just create more of it. So everything continuously goes up in this measurement. So you need a new measuring tool. And then you go through all the ways you can measure. You go to gold, and then maybe you discover Bitcoin and you're like, oh, it's much more stable. And then you kind of over time.
Well, Bitcoin isn't beautiful because it's much more stable. We know it's finite.
Fixed.
It is absolutely stable.
Yeah.
The last bits of Bitcoin are being mined over the next 100 years, but we know exactly how much Bitcoin,
what the inflation rate is.
Yeah.
Yeah.
So now we have something that has monetary properties that we can use to measure the old system against.
Mhm.
Because we never had that before, gold was the closest. It makes it really difficult to understand the game.
Exactly.
But now that you have this measuring tool to measure the other system, the old system against this new network, Bitcoin, it kind of opens your eyes, and then there's just no turning back. It's kind of like once you see email, you're like, wait a second, I can just attach all these files and send them over to Aiden or Anthony. I don't have to go to the post office and get an envelope and a stamp and wait
Yeah.
3 days. Like
Mhm.
there's just no going back from it. And that's accelerating right now.
And
Yeah.
so then why is AI going to pull GDP down?
Well, okay, so this is like where a lot of economists, I actually want to bring Richard back on the podcast to talk about this specific point, because to me, this is where a lot of economists get things
Because a
wrong.
lot of economists will say they think AI will increase
Yeah,
GDP.
because they'll say there are three main levers that will influence GDP: labor, productivity, and debt or capital growth. Those are the three things. And then so they will say, well, if productivity is increasing because of AI, GDP has to go up. Productivity is going up. Therefore, it's great. Like that's kind of like the summary of the analysis. If a company can produce more things, great, GDP goes up. But my argument against that comes from Jeff Booth's thesis in The Price of Tomorrow. And I'm probably not going to articulate it closely, as closely as well. I'm already stumbling. Like Jeff Booth would. But when a company can do more for less and produce more units of whatever it's producing, there's two things that you need to consider in this situation. Is there demand for all these extra units of things you're producing? And if the labor force participation rate is going down in the Western world and there's less people working
because of demographics,
largely because of demographics,
but also plus.
Okay, yes, let's get there. But let's just stay with demographics first. You have less people who have incomes to buy all the extra units of whatever you're producing. So your productivity gains really aren't gains because no one's there to buy. And then on top of it, if the productivity gains in AI in service-based businesses are so large that you start laying off people, you are now accelerating the decline in labor force participation. You have even less people. So great, your business can get more productive, more efficient at producing what it's
with
producing.
less and less people.
With less and less people.
Yeah,
but
that's crazy.
you are a net negative. This isn't a positive. You're a net negative. Whereas most economists, and I would welcome the argument on the other side of this, but most economists are thinking, no, that's not the case because a company's more productive. I'm like, but the destruction of all that extra productivity with less jobs, less people earning income, less taxes being paid as a result. Like, is AI paying? If someone gets laid off in a business because AI can write the reports that a human did, is the AI now paying taxes?
Yeah, where
to
do the
federal
tax receipts
government
go? There are none.
Because the GDP is ultimately measuring spending.
Yeah.
So if those people are losing their jobs because of that productivity boom, there's less money to be spent.
Exactly.
And I think a lot
but they will hide that under, but the business is way more productive. Well, it's way more productive and might profit for a bit, but then there's going to be a wall when nobody's working anymore.
Mm-hmm.
Yeah, totally. And I think a lot of people will say, oh, well, AI will just kind of like what happened in the internet. It took away some jobs, but then more jobs were created. But with AI, I think people don't realize that, yeah, sure, new jobs will be created 100%, but the amount of jobs that will be lost due to AI, I don't think many people are understanding at all.
I don't think people are getting it at all. I agree.
Like in 10 more years, like, are people going to be working in factories?
Yeah, in 10 years, you're right. What happens to factory workers? What happens when you have robotics with AI combined together?
A lot of Tesla is one of the only companies, because their robotics and manufacturing has been so good and needing less and less humans, they've been able to decrease some models of their cars prices. Even in this inflationary system, they've been able to drop some of the car prices.
Yeah, I didn't know that. That's crazy. Yeah, that's crazy. And I think that's why when I look at Bitcoin and I get so like amped up about it, I'm like, oh my gosh, like as much as this is all kind of like bad news for the old system, there's this thing that if you understand it and you do the work and you understand it's not just like a digital thing, there's nodes, there's a network, it's protected by like the biggest wall of computing energy that humankind has ever seen. If you understand the mechanics and the architecture of Bitcoin to understand it's a network and a protocol and not just like a digital string of numbers, like some people who will like to critique it will call it, you realize like, oh my gosh, it's all good because I can transfer some of my time and labor's value into Bitcoin, and Bitcoin will protect the purchasing power of it because it is finite. Nobody can debase it. And it has monetary properties. It's not finite like maybe some Rolex watches are finite because a company said it's finite. It's literally finite because the algorithm that people around the world are all running and agreeing on the rules protected by miners have said it's finite.
Yeah.
Mhm.
And I think another,
no individual, sorry, just on that note, no one person can change those rules.
and you were mentioning also from the economic update that the average, I think it was Jordy Visser, a clip of Jordy Visser talking about the average lifespan of an S&P 500 company has been going down over the years, and it's now down to 15 years. And now with AI and open source software that people can copy, replicate, and add on to, what's going to happen to the length of these S&P 500 companies, or, you know, all companies in the world, and likely continue to decrease? We don't have the answers. I think
no, but my fear in that comment comes from how many Canadians are invested in a stock portfolio of companies that we don't know. If the average lifespan of an S&P 500 company is 15 years, how many Canadians' retirement that is 15 years away are invested in companies that have an increasing probability of not existing when they retire? Who's steering the decisions to guide those retirement investments?
Totally. And then I'm sure the government will try to fight, you know, these things from happening by, you know, introducing all kinds of policies and stuff that don't really work. But
yeah, they'll try to make they'll make the problem worse, trying to solve the problem.
Yeah, totally.
And I guess like the opportunity is still so early for someone to jump into the new system. It's literally like just watching the rebirth of the internet to me. Like I was here for the birth of the internet. Like when I entered university, there was no internet. By the end of university, everybody's going on the internet to do research. Like in a span of 4 years, it literally went from what is email to like, oh, you can like do all this research and I can globally access other universities' libraries. I'm not just like stuck to the library at the University of Toronto. So within 4 years, it just went from that. And I feel like I'm just watching it all over again. Whereas like right now, you can't access US dollars very easily. Aiden can't, Anthony can't, I don't care. Anyone who thinks you can go and start a US bank account, you got another thing coming. You can't do it. 4 years from now, what's it going to be like when you can download the Aqua wallet today? You can load in some Bitcoin and then swap over the Bitcoin to USDT, which is a crypto version of the US dollar, and send somebody in, I don't know, Australia, US dollars tomorrow, today, 5 minutes from now, if you want.
Mm-hmm.
And these companies are going to be forced to adopt things like that, and even just using these new technologies in their own businesses and practices, because if you don't, AI will just probably do it better. I know there's already doctors we're seeing on Twitter that are scanning MRIs and other medical reports through like these LLMs to get results, to make sure what they're thinking matches kind of like what some of these AIs are thinking. And sometimes the doctors have been wrong and these AIs have been right. Yeah. So I think people need to learn and embrace these technologies for themselves to be able to offer value, at least on like the white collar side of things. I think, you know, electricians, plumbers, those guys are going to continue to kill it, I think, over the next 10, 20 years. Because I don't think those jobs are going to be replaced. It seems like the white collar jobs are definitely at threat first, for sure. So I think those like hands-on type jobs will continue to do very well.
Yeah. I think with the emergence of MSTR and now 21 Capital, we're watching the Netflixes of the banking system being born in front of us. And I don't think Canadians understand that Canadian banks are in for a world of hurt. And I think anyone from traditional finance listening to me is going to say, Tom doesn't understand bonds. Tom doesn't understand the current system and how big and important the banks are. And Tom doesn't understand that if the banks went away, how devastating that would be for the Canadian economy. And I would like to answer that by saying, I fully understand all of those things. That's why I get so amped up. I'm like, you guys don't see what's coming. who in their right mind right now is what capital allocator in Toronto right now in charge of some pension fund is going to say US treasuries are a good investment when they know the amount of debt and interest payments that exist in the US system right now? Who's making that decision?
Yeah, that's brutal. The real value of those dollars in 10 years is going to be nothing.
It's going to be nothing.
Maybe not nothing, but it's going to be less than they are today. That's for sure.
And I think it's before, when you didn't have another system to allocate capital to, you kind of went into that and it was like, the best you could do. Because, if you're going to get a US Treasury, it's very safe and stable and you're going to get some interest. So it didn't feel that bad. What another financial system that is being born separate from the old system does is it gives you an alternative where the returns of purchasing power in the next few years can be so great that now you have to question the expertise of the person allocating capital if they don't recognize that. It's like, what are you doing? Whereas before, when it was just one closed system, I could kind of see like, okay, like, well, my hands are tied. Like,
yeah,
I'm bound by the duties of this pension fund to allocate X number of dollars or X percentage of the portfolio to bonds. But somebody needs to go to that committee right now and say, hey, the world is actively changing. Are we looking at this new system at all? It's just wild. It's wild to me.
I think that's the thing, right? Like companies, pension funds, insurance companies, countries are all kind of required to only be able to hold these treasuries, right? They don't really have options. I think corporations can only hold treasuries as
on their balance sheet.
Right?
I don't know, but sure.
Yeah. Insurance companies, portfolio managers,
those kind of companies. Yeah.
So it's like they're kind of locked into these things, right? Which is
there's these rules and regulations on them.
Yeah, which is the big opportunity that MicroStrategy's exposed by giving people a kind of vehicle to get access to Bitcoin's superior returns through these fixed income requirements that they have to stick to, right? But as that starts getting blown apart, maybe more and more, as some people do wake up and say, hey, what the hell are we doing? Why hasn't anybody rethought this? Why don't we go back to the drawing board and look at some other options? Why don't we change some rules and regulations? Then yeah, the floodgates open, I think, because you're right, it's a broken old system that nobody's really questioned or done anything about yet.
Totally. And there'll be people in that system fighting against it. And then you'll have the people like what happened today with 21 Capital embracing it. And it's going to be funny to see the two like sides go at it.
And I think what Michael Saylor did, I think about maybe 4 months ago or 6 months ago, we did a podcast where we were talking about like how he opened up a black hole in the financial system, and that black hole is going to suck out all the capital into the new system.
Yeah.
And why today's announcement of 21 Capital is so stunning to me is that he's done it. You now have another company saying, hey, we're going to also open up a black hole. So by him opening up that first black hole and sucking out the financial assets from one system into a new system, other people have looked at that and said, wait a second, we want to play this game of escape hatch too. We're going to open up a company that does the exact same thing. So like he's done, like by him doing it, he's now, another company is making another black hole in that system.
He's accelerating the transition.
He's accelerating it.
And he's just making his own company stronger. Like that announcement today just makes strategy stronger, puts them even in a better position, I think.
And I think where a lot of people, might miss this is that they will think, I don't know if this is really going to take off. I'm going to kind of wait. And I guess that's fine. Like, you don't have to get all amped up. Like I get amped up about it, but I'm like, geez, like this is just,
don't you want to make money?
Well, just protect your own purchasing power. Like, look how hard everybody, I mean, Aiden, you exchange your time and labor here at Rockstar. Anthony, you exchange your time and labor here at Rockstar. You're literally exchanging your time and labor for a payroll that comes out in fiat dollars, which is equivalent to getting like Dave and Buster or Chuck E. Cheese tokens. Mm-hmm. And you're just hoping that the manager of the nation that has those tokens doesn't print another 100% tokens to like debase you.
Which they have to.
Which we know they have to because of our whole GDP.
Which is a mathematical certainty.
It's a mathematical certainty because it's a Ponzi.
Yeah.
So they have to. So you kind of are like, well, you get up every day and exchange your time and labor for this, and you're getting token. You're literally getting fiat tokens.
I like that point, Anthony, that, it's just math. You used to use an example of, I don't know if it was debt to GDP, like Do you remember that example that you talked about? And it was just math, something like
Oh yeah, I
that
actually forget it.
ratio.
Yeah,
Okay,
the
okay.
ratio of how much.
It was. I think it was from Greg Foss.
It was like, yeah, it was like if debt to GDP is 4-1, and like if the interest rate on the debt is like 5%. Well, for the GDP to keep pace, rough pace with the growth of debt, GDP has to grow 20%. So that roughly, I hope I'm doing that math properly. So then if that's the case, and how does GDP grow? Well, Anthony, to your point, it's just a count of the dollars in the system. So they have to inflate this sucker up like 20%. So that's the inflation rate that we should expect.
Yeah.
Another way to think of this is like every dollar that came into Canada's existence came into existence plus interest. So if you reverse the entire Canadian economy back to the very first Canadian dollar that came into an existence, and I want to just kind of footnote this by saying we back-ended into a central banking system in Canada. So this isn't exactly how it worked, but the analogy here holds that if you go all the way back to the very first dollar that ever came into the economy, that dollar that came into the economy, because we're a debt-based currency, came in with interest owing.
It was borrowed into existence.
It was borrowed into existence.
That dollar is a liability because interest is owed on that dollar to somebody else.
Yeah. So that if the first dollar that came into the economy came in, but the moment that came in, $1.10, if the interest rate was 10%, is owed back to the central bank for that dollar. But the entire economy is only composed of $1. How do you get the extra 10 cents to pay off the debt? This is why it's a Ponzi. The only way to get $1.10 to pay back that original $1.10 that's owed back to the central bank is to borrow another dollar, which comes in with more interest owing. You literally can never pay off the debt.
Mm-hmm.
That's why it's a Ponzi. And once you start to see that you're getting paid in Ponzi coupons, you just realize I have to get hard assets. And that's what attracted us to real estate and still attracts us to real estate.
Mm-hmm.
There's just levels to the hard asset. We've just never had like a perfectly engineered money before to enter the conversation.
And they're slightly different too, because real estate's more of a business with income and expenses rather than strictly a store of value.
And it shouldn't have never been. Yes. I mean,
Yeah.
It should have always just stayed of like, hey, how much rent are you generating? What are the expenses? Does this make sense at this price point? And that would have corrected or done more for making housing affordable than anything else that these politicians are promising.
Yeah.
It just stayed to that. But the monetization of real estate just kind of destroyed the ability of Canadians to buy it because it sucked up this monetization value, which I think now will get transferred at some speed, which we all debate over and over to Bitcoin. And real estate will still be a need. It'll just go back to its proper value.
Totally.
It's so crazy. It's like seeing the Matrix. Like you figured out the plumbing of the system and how it works. And once you understand that, it's literally like you're Neo and you see the Matrix.
Yeah.
And it's like, well, no matter what happens, no matter what headline, no matter what politician, no matter what banking change, no matter what regulation, you just see it happening in the code structure. And you're just like, the bullet comes and you just freeze the bullet and it just drops. Like you just buy Bitcoin and you just opt out. It's literally like nothing matters. Like reality does not matter. You've figured out the game.
And a good point, just talking about the monetary system and stuff like you were just mentioning, Anthony, is the big print. I'm halfway through it. I haven't finished it yet, but I just got to the halfway point.
So that's a book by Larry Lepard that came out, I guess, 2 months ago.
Yeah, just at the beginning of the year. Yeah, February maybe. And that does a great job of just explaining the current system and why it's broken and how we've gotten to where we are today. And then ties in Bitcoin at the end, which I haven't read yet. But that first part does a really nice job simply explaining like the current monetary expansion that's been happening and why it has to happen, and what's going on. So if you want a good book, kind of breaking it down nice and simply, The Big Print's a good one.
It's crazy. And then when you look at the US and they have all these, what they call off balance sheet liabilities. So like what they've done in the US is they say, okay, we have like $36 trillion in debt or whatever it is, roughly about that. But we also like potentially have 180 trillion more. But we are not counting that as debt on our balance sheet because like the people we owe that money to through Medicare and Medicaid and all the Social Security stuff, maybe they won't like live, like maybe they won't be around by the time we owe it. So like we don't really know if we should put that on the balance sheet or not. But like clearly people know that they're not going to all die tomorrow. So some of that should be on the balance sheet because they've promised these American citizens all of these social benefits, but they just conveniently keep it off. So now every year, I think it was Luke Gromen was breaking it out, was saying about $3 trillion of that is coming on to their spending every year. So now their deficits are just going to continue to blow out because they have these payments to be made that they don't really have the money for. So the next few years of just allocating spending to this unfunded liability portion that's coming on to their annual spending is just another thing that just makes you look at the system going, what the heck are we doing?
Yeah. And during this past election cycle, or I guess even now when the administration's in, I feel like Doge, like what Elon's been up to, was kind of like advertised and sold to the people as this way to like reduce government debt and get like the books back in balance. And they've been able to reduce a lot of government waste, which is awesome. But I think they're just saving like, I don't know, I'm just asking Grok what it is now to see how much they're saving. But it looks like around 100 billion maybe for the year. But the tax receipts and the deficit that the US runs is, do you know what the number is?
Yeah, it's about 6% of their GDP. So
I forget what it is, and it's not even close to the deficit that the US runs. So it's awesome that they're reducing the government waste. But it was sold almost as like this way to, I don't know, reduce some of the debt.
It's also crazy that the government is such a big part of the US economy now that by Elon controlling some spending of the US government, he is actually going back to our GDP. Kamoni, he's actually reducing the GDP in a substantive manner. So it's like you have this beast that grew to this point where the government's not like 1% of GDP. And if you stop it from spending money, you actually have a negative impact on GDP. And we just discussed earlier, GDP always has to go up. We're just kind of like at this Bananaville moment of the whole economy, which I think once you peel it back and start to understand just that the numbers don't work anymore and they just have to print more money, it just becomes, I think, really obvious of like, you got to grab some hard assets for you and your family.
Yeah.
Kind of like with some urgency.
Yeah. And then just speculate on, which of those hard assets are the best or what will the new monetary system be built from? Will it be gold? Will we go back to a gold standard? Will Bitcoin maybe be involved? Will it be something else? What kind of hard assets do you want to own? What makes sense for you and your life? Yeah. Then it's just speculating on like what to grab.
Yeah.
And with all this change does come opportunity. Like what Atti was talking about at the event is pretty cool because they're, like a crowdsourcing what's the best way to describe it? I guess
it's like a real estate crowdsourcing platform.
You can invest in a rental property for $1. So if you're an investor that buys the property and you want to convert into a fourplex, let's say, you can put it on the Atti platform and crowdfund money that way. And they handle kind of all the back end paperwork, all in the system and the software. And I think you're going to talk to Steve, who runs Atti, about what they're up to, but they're kind of cool because it's like real estate, tech, and then I think you can get some cash flows paid in Bitcoin now.
Yeah. They're touching on all. They're smart because they're touching on all. But I think that's an example of how technology is changing the world because, when we got into this real estate game, you couldn't invest in like a commercial grade investment property for $100. Like that opportunity just wasn't open to you. And technology is now democratizing that, where that's now through Atti open to everyone.
Even stocks, like you would have to buy the full share price.
Even now you can get like fractions of stocks, right? So yeah, technology is just kind of changing things really rapidly. And then when Atti now has the ability in what they announced to say, okay, on the cash flows or dividends that are going to come out to you from these investments on their platform, you can choose to get paid out in fiat dollars, so Canadian dollars, or Bitcoin. You could just see how the world's changing. Right? Because now you can get paid out in Bitcoin from their platform.
Oh my God, they're doing the breeze.
Yeah, they're doing the breeze. And that's something I just wanted to talk about, that if anyone is listening to this and wants to look at a calculator that kind of covers how you can use one of your rental properties as a source of funds to invest in some Bitcoin, that calculator does a really good job. We're going to do a YouTube video just on that calculator explaining it, but that calculator is at rockstarinnercircle.com/breeze, which is BREAS, stands for Bitcoin real estate asset strategy. And
it's catching on too. I was talking to a Rockstar member on the phone yesterday, Mahul, and he's like, yeah, I think I'm going to do the breeze. I was like,
That's
yeah, you
awesome.
think so? He's like, yeah. I'm like, sick. It's
That's
sticking.
awesome.
Yeah. Well, when you look at the numbers on it, like I'm going to share an example since we're kind of talking about it. Let me just pull it up here. Rockstar.
Yeah, it's a cool calculator for sure to play around with and just see
like listen
what some of these numbers can come to.
Yeah, exactly. Listen. Okay. Look at this example here. I'm going to put $100,000 here. Okay, this example, some people are going to think it's completely insane. Sorry, guys. I can't put it up on the screen because my screen is like inverted. I have to ask Keith how to fix that for next time. So if you take a $750,000 rental property, and that property, if you're fortunate enough to have like $500 in cash flow, the $500 in cash flow at 5.5% interest would cover $100,000 credit line against that property. So I just want to repeat. You have a $750,000 property and you're fortunate enough to be able to get a credit line against that property for $100,000. That $100,000 is going to cost you at 5.5. It costs you $458 a month to carry that credit line. And if you take that $100,000 and you buy Bitcoin with it and you hold that, your goal was to hold that property for another 20 years. At 7% interest, the property after 20 years is worth 2.7 million. So started at 750, it was worth 2.7 million 20 years later. Then you took the $100,000 in a credit line, you bought the Bitcoin. And if you use an appreciation rate, which I consider kind of normal at 29% compounded for Bitcoin over the next 20 years, you can adjust that on the calculator, lower or higher, whatever is your fancy. The Bitcoin goes from $100,000 to 12.6 million. Now your combined asset is not worth just the 2.7 million that the rental property is worth. When you add the Bitcoin value of 12.6 to the 2.7, your combined Bitcoin real estate strategy has a value of 15.3 million. So instead of just 2.7 million of the real estate property by itself, you have 15.3 million. And the risk return on that to me is acceptable because on the $100,000 investment in Bitcoin, the cash flow from the property is paying for it. And if the Bitcoin falls in value and goes to zero, well, if I hold the property, it's going to suck. It's not going to be great. But if I hold the property for some years, the value of the property is going to offset that loss of $100,000.
Mm-hmm.
But the upside to me in this example is $100,000 gets me $12.6 million in Bitcoin, the fiat dollar value of it after 20 years. So it's just a nice way for real estate investors to take one asset and allocate some of that capital coming from that asset to Bitcoin, and you get the best of both worlds.
Mm-hmm. Leon did a good talk on this that we're going to release on YouTube later today. Not talking about Bree specifically, but combining the two asset classes together.
Yeah. And the reason I like his discussion so much is that you hear when he's talking about like holding development projects for 5 or 6 years. And what happens is if you allocate 10% of the capital used for a real estate development project, at the end of the project, if you just hold 10% in Bitcoin, you have a Bitcoin, assuming it's appreciated through that 5 years or 6 years. So these are longer term projects. You now have some capital that can be used for stuff that was not planned for updating things, maybe changing maybe the rent on the project is going to be less than you anticipated for whatever reason, but you now have this buffer. And if you held that property for 10 and 20 years as some sort of rental property, and you keep that allocation to Bitcoin, now when you need a new roof or new windows, you don't have to just put in the cheapest roof possible. Whereas before, if you looked at like longer term, like look at this building right here that we're in, this commercial building, there's a trust account for like the condo board that keeps like the funds for the condo corporation. And they're banking on hoping at getting 3% interest on the funds that are in that account, 3%. But in 10 years, we all know that there's going to be a major roof repair required, or in 15, 20 years, windows. The cost of those things today are not going up at 3%. The cost of those things, the roof and the windows, are going up more like 8, 9, 10%.
Mm-hmm. Yeah, totally.
So now if the funds in the account that are made to that are supposed to pay for those things in the future, you literally don't have enough money in the condo corporation to uphold the building to the state that you want it at. And you have to get like the cheapest windows or the cheaper roof, or there has to be a special assessment and everybody in here has to throw in extra money to make up for the lack of funds in there. But if you just allocate those funds to Bitcoin, it changes the entire real estate investment. You're going to have plenty of funds. And again, I guess there's no guarantee, and Bitcoin hasn't been around long enough for some people to kind of prove that to be absolutely true. And that's a fair statement. But it seems like every day that passes,
It's worth looking at
more and more. Yeah, you should look at it.
If it continues what it's done for the last 15, 16 years, then that's a pretty solid.
But it changes rental properties too, because if you just did that on your own single family home rental property and allocated some of the emergency funds that you needed to Bitcoin, now it's going to be volatile with within any 3, 4, 5 year window. But after 5 years, when you have to replace the roof on that house or there's a leaky basement, you have like the funds to do it because the Bitcoin grew in value for you on the single family home. And you're not as desperate to raise rent on the tenants in there because the Bitcoin's kind of offsetting some of that kind of stuff. Yeah. It really produces a better asset overall.
Totally.
It can change a lot. And the crazy part is there's some people who are doing this right now. So it's like already changing things.
Yeah. Leon had examples of developments that he's done in Germany, including Bitcoin in the balance sheet and the development.
Yeah. Wild times.
Balance sheet strategy is like a whole new topic that like nobody ever talked about before because you couldn't have a balance sheet.
Because if you kept any dollars on your balance sheet, like they were just useless. It was the idea was like, what are you investing in?
Exactly.
Whereas now on your balance sheet, you can just keep straight up Bitcoin on the balance sheet and your balance sheet can look super healthy.
Like when did you ever hear about companies or real estate developers or investors talking about having a treasury strategy?
Yeah, it was
or
dead
a balance
capital
sheet strategy.
It was dead capital. So they're forced to buy other companies or invest in other things because dollars there were just dead capital.
Yeah.
It's totally. Like a new term. And like you as an individual, let's say living in Canada, wouldn't even have a balance sheet strategy or a treasury strategy. It's like, no, you just kind of, if you're a real estate investor, you don't necessarily save your way to down payments anymore. You just kind of leverage the real estate you already have to buy more real estate.
Yeah.
Because saving doesn't make sense in this economy. So like, this is a brand new term, is to have a treasury strategy or a balance sheet strategy.
Yeah, like you never looked at someone else's family and said, well, what's their treasury looking like?
Yeah.
You would look at them saying, well, what's that family invested in?
Yes.
What are they investing in? They have these businesses or they have these properties.
Totally.
Yeah. And there's only these like really extremely well-financed institutions like a Harvard endowment fund that would have like a treasury and a treasury strategy.
With investments. And
with investments, right? But like it's like a pension fund. They're invested in the markets. They're still not just holding cash on their balance sheet, like probably just enough for operational things to replace the windows at Harvard every few years or whatever. But this changes everything for everyone, individuals, companies, institutions, countries.
Everything.
For sure.
It fucking changes everything.
Everything. And it's happening now. Like there's no light switch that you have to wait for. Like it's literally, you can do this right now. You can combine, you can go to like Western and get a beautiful student rental. If you want to mix both asset classes, you can get a beautiful student rental today.
That will cash flow today.
You can take all the cash flow from the student rental and buy Bitcoin every month with it.
Yeah.
And you could have a beautiful student rental and you could be accumulating Bitcoin. And your future is going to look a lot brighter because you have those two things that you're armed with versus not having them.
Yes.
And I think so many Canadians are just thinking like, oh, I'm just going to wait to see if this pans out. And I'm like, ugh, look into it more.
Yeah. And it just gives you so much optionality in the future when you have this capital that'll continue to grow and increase your purchasing power.
Because the real estate you directly own, you don't have an institution owning the thing in between you and the real estate. And the Bitcoin you own, and you have no jurisdictional real risk to it because it's like,
it's a cool combo for sure.
Yeah. Like your Bitcoin's still owned, I guess, in the jurisdiction of Canada, but when could you have instant access to your Bitcoin?
A lot easier than a lot of other things.
Yeah, a lot easier. Can you imagine liquidating some other types of investments, including real estate? Like real estate, we've always liked starter homes because of their liquidity, and it is the most liquid piece of real estate in the country of Canada. But can you imagine you were invested in like 15 like commercial units somewhere? Like that could take you a long time to unwind.
Yeah.
So having a combo is like so beautiful.
Totally.
And I think it's happening right now that people don't see it, because I think when I first started looking at it, it was like, is there going to be a light switch moment? Like, when is the moment where
Yeah.
it just like wins? But then you realize, oh my gosh, when you start pricing things in this new asset class, it's happening now. Like every year, things priced in Bitcoin are getting less and less.
Yeah,
and less.
you're in it. You see it.
You're in it. It's the hardest thing. What do you think would be the right book for someone to start to understand some of these concepts? Is it Larry Lepar's new book?
And then maybe if Larry's for sure, to understand kind of what's happening in the monetary system today and then tied into Bitcoin, but then also The Price of Tomorrow was a super easy read.
It's
and
an
kind
easy
of
read
talks
with
about
like the deepest concept.
Yeah, because I
Yeah.
think it's so relevant because everyone's kind of confused on what's happening with technology and AI and how it's going to impact our current system. And that does a super simple job of breaking it down and just explaining how these deflationary forces will continue and kind of how it will evolve going forward. It doesn't even really touch on Bitcoin too much.
So that's a good combo though. The Price of Tomorrow for the new system, and Larry's book, The Big Print, kind of describing the situation with the old system.
Yeah, The Price of Tomorrow still talks about.
Yeah. It's
the
not
old
really the new
too.
system, but he just does a really good job of breaking.
They're both
down.
really good,
Yeah.
worth a read for sure. And then I just wanted to mention, we've been sharing this image. I'll read it out. It might be a little bit confusing, so we can share it afterwards. And it's the old path. So you're just talking about how you used to be able to do this years ago.
It was some tech founder who put this out.
Okay.
To be fair, and we morphed it and changed it a little bit.
So the old path, it says you go to school, get a job, save, and retire. So school, job, savings, and then retirement. And the new path is skills, assets, audience, mindset, simultaneously all at once, gives you options and freedom. And I think that's just such a good visual, because even with AI and these things that might be taking away jobs, as we said, there'll still be opportunity. But if you can build skills and an audience, like having an audience will still be important when there's going to be AI running around doing all sorts of things for us. Because I don't know, I think when you can relate to people and offer value to people,
when you have a pool of people who are paying attention to you and also trust you,
it gives you so many options, no matter what kind of area that's in.
Mm-hmm. Agreed.
And I feel like I've come to understand that more and more now, just seeing like the way Rockstar works, like the events. And I'm like, yeah, it's cool to see just what can happen when you keep building on some of these skills and audience and stuff like that.
Yeah. Relationships around us are going to be more and more important. Whereas I think in the previous like 40 years, it was all about quick financial transactions and how much money you could grab. It was like a very fear-based type of living. And I feel like we're moving more to like a kindness and a situation of taking care of each other, and to build that type of audience that trusts you in the kind of that regard in some capacity is very, very valuable, and you should build it and cherish it and take care of the people around you. I think that's going to be a really, really important new kind of asset. Like,
yeah,
you know,
for sure.
the audience. And I think it applies to everyone, because the people around you and your family can be your audience, or it could be your family and friends, or it could be the people like family and friends and the people in your community that know about you. Because if you're you run a local service or store, or, you know, a local business proprietor of some sort, or it could be your family or friends, the local community, and like the entire province or the nation or the globe.
Totally.
Like there's different sizes to these audiences.
For sure. It doesn't have to be the globe. You don't have to be like the Kim Kardashian of the world or whatever it is.
Exactly.
That actually makes me understand that a lot better, is just like relationships. Like the quality of your relationships will give you more optionality and freedom when combined with.
I really think so.
And I think as AI does more and more kind of maybe like low level type automation tasks, if you can still, like you've mentioned this to me, if you can still understand the strategies and like fundamentals of whatever it is, whether it's marketing or, you know, coding, whatever it is, I think you'll still have an advantage, because a lot of people might no longer know or learn the fundamentals of a lot of these things as AI kind of does it for us.
That's a good point. Like nobody understands the principles of pretty much anything. Like no one understands the principles of marketing. They understand maybe some tactics, and maybe they get to a strategic level, but they definitely don't understand the principles. Same thing with money. The people just are they understand the tactics, like, oh, get some GICs right now. The interest is high. Oh, you know, buy a pre-construction condo. Like I heard they're going to go up like crazy. Oh, you know, like buy this property in like Colombia because it's a good deal. But they don't understand they don't have like a cohesive strategy to what they're trying to implement for their own assets. And they definitely don't understand the principles of the global economy and how money works.
So I think going deep on whatever it is for you will still give you a massive advantage going forward, because I think as AI does some of this stuff for us now, less and less people will learn like kind of like the basics.
Yeah.
I don't know. We'll see.
Yeah, that's weird to think about that. If the tactics are gone and replaced by AI, and very few people spend time getting strategic, and less people even think about principles.
Unless AI at some
you
point
could
gets
ask
so
the
good.
AI, what are the principles?
Yeah.
I guess.
Because you could go on chat right now and be like, what are the deepest principles of marketing?
Yeah.
And it's read all the Dan Kennedy
And then maybe
books.
AI
It would
agents.
100%. Yeah.
Yeah.
I think it's
But
read.
you need to at least ask it. Like, you need to know that the Dan Kennedy's ideas of marketing are the principles that you want to know about. Because if someone else writes a book saying, here are the principles of marketing, and those principles are incorrect, wrong, or ineffective, ChatGPT is just going to spit you back these garbage principles.
Well, and then maybe there's
But I
someone
think
that understands.
cross-reference it with all of the material it's read
You think
and be
so?
able to distill down
And this is
the
where
most
like
truthful things.
I think this is also the opportunity for like AI agents, where someone like that understands the Dan Kennedy principles can build like an AI agent specifically on what we want it to do.
And this is where I think audience is going to be important, because if somebody has a group of people that trust and know them, like if a bunch of people know Anthony Molinaro and say, oh, you know, I've come to realize that whatever Anthony says, I've come to realize is likely true because he's done a ton of research and I like his analysis. And you release an AI with your flavor of answers in all these areas, that's going to be pretty valuable. Like I really think people are going to go to that level with AI, that it's not going to be, I don't want the Google or Microsoft AI.
I think there'll be specialized AI.
Yeah,
for sure.
I want the AI that's like been vetted by Anthony Molinaro, because I've known this guy for like 20 years and I've come to really trust him. So if he says that this AI has this medical information and this marketing and this business information, I'm going to trust that one more than another one.
I feel like I can already
totally
see it, like some medical AI that's really good at analyzing some certain medical documents, and that's kind of all it does.
Yeah, like if
and that
Andrew
explodes.
Huberman came out and said, this is the one I would use to ask it any health related questions.
Yeah.
Exactly. Versus like the one that is like approved by the doctor association in the US that has all incorrect nutrition information and like just wants you to take drugs your whole life and statins to adjust your cholesterol.
Yeah.
You know what I mean? I think we're headed there.
Yeah.
Whereas before with technology, it was like just global. It was like Google search was the best global. You know, now I feel like we're kind of reversing gears to like just, and that's again why I think these audiences as a business owner just matter so much. Building a group of people around you that know and like you and trust you.
I think we're headed towards so much positivity and abundance that you can't even wrap your head around it. And your mind is still stuck in the negative current system that we're in, that it's like, I almost can't allow myself to understand how positive and abundant it's going to be. I don't know why I can't do that, but it's like, when we talk about it, it's so obvious and it's on the doorstep and it's already happening. But this system is so bad for so many people that it's hard to not get caught up in it. But I think it's really powerful to have conversations like this, because it makes me just feel how abundant things are going to be.
And that abundance is displayed through love, because if in the past system, you operated from a place of scarcity and fear, because there was never enough. You didn't know how much you needed to live and survive. But when you have some certainty, and this is why I think Bitcoin is humanity's inflection point. When you have some certainty in life, I can want the best for my neighbor. I can want the best for Anthony Molinaro or Aiden Karadza. You know why? Because I know I'm going to be okay.
Mm-hmm.
I'm going to be fine.
Yeah.
And I have now enough. I know I have enough. So you know what? I want to help you. And I want to kind of make sure your life is as good as it can be. And that comes from the certainty of me knowing that I'm in a good place.
Mm-hmm.
And now it allows me to express love to my neighbor, as opposed to coming from a place of fear and scarcity and lack.
Yeah.
Like it's
your cup is full.
It's a complete reordering of relationships. I really think it's that big of a deal as well.
Yeah. Nuts. I'm so happy we found it. we sound like crazy.
We sound
people.
crazy. Yeah, we sound crazy. Good place.
We sound like,
good
yeah,
place to
for
wrap
sure.
this up. Good place. We're crazy. Yeah.
It's a cult. Come join us.
Yeah. Good. Anything else that you want to?
Go Leafs, go. Game 3 tomorrow.
Yeah, go Leafs. You guys are getting me back into the Leafs. Go Leafs.
One step at a time. First round. We got this one.
Leafs in 5. Leafs in 5.
Yeah. That's
Florida's in
I'm,
the
I'm
next
rooting
round.
for you guys, man.
Thanks, everyone.
See ya.